GFMS Platinum and Palladium survey for 2015 was released today. Joining me on the line is William Tankard. He's the Director of Precious Metals Mining at Thomson Reuters. Thank you so much for your time. Maybe let's just set the scene for where we are. Let's talk about platinum and let's talk about Palladium, William. Platinum, we do know that the kind of pressures that we had last year with regards to the deficit was on the back of that protracted strikes that we had in South Africa. Set the context for us and where are we, how are we looking going forward?
Sure. Well, I mean, last year was obviously an exceptional event with the 22-week strike across the Western Bushveld. That had the knock-on effect of output from South Africa falling by around 29% in terms of refined platinum production last year. Now, obviously, there were slight differences in terms of inventory movements. The mining companies had built up stocks which they were able to release, and the consumers had built up forward purchase positions, so they were not quite so beholden on the shortfall in refined output. That aside, though, if you look at the physical supply-demand balance, what we did see last year was a market shortfall, a market deficit of a shade over 1 million ounces. Now, in terms of where we think this is likely to progress in 2015, yes, we are expecting to see a rebound in mine supply as the strike-afflicted assets return towards normal production. Obviously, the operators have done a fantastic job to get operations back towards normal. But what we are not really expecting is any great shakes on the demand side. So overall, I think what we are expecting to see is a continued deficit in platinum next year, but a lesser deficit than was the case in 2014. So probably to the tune of around 670,000 ounces in 2015. In terms of the price, obviously referring back to 2014, the deep deficit did not translate to a meaningful price uptick, and that leaves us quite cautious as to call any sort of intuitive relationship between this market in deficit and necessarily a positive pricing performance. At this stage, our take is that probably what we're going to have to see is proactive and sustained cuts to mine production to really reintroduce some investor confidence in the sector after the events of the last 12 to 18 months.
William, let's talk about palladium now. In your report, you say that palladium price is going to now stop its long-term bull run. How long has this bull run been in existence for some of us who don't look at this particular precious metal very closely, and of course, again, just the outlook for it?
Sure. Well, I mean, obviously it's important to South Africa, but to a lesser extent than palladium. It's a smaller component of the basket, but this is a metal produced by all of the South African PGM producers. In terms of the long-term bull run, this is sort of, in essence, post the global financial crisis. Palladium bottomed out at around $170 an ounce in late 2008. And since then, it's rallied to average a shade over $800 per ounce in 2014. In terms of the price trajectory that we see over the next couple of years, basically, we think that it's got caught up in a number of sort of cross-asset issues. The strong US dollar, concerns over rate tightening, as well as more localized issues, possible talk of market overhang with renewed discussion around Russian central bank stocks. So there's a few possible negatives, but that's not to get away from the underlying fundamentals of the palladium market looking extremely positive in 2014 and over the course of the next couple of years. So hence, alluding to the rally taking a breather, we think that probably annual averages are going to be broadly comparable to that of 2014, but we are expecting a continued uptrend over the next couple of years.
William, thanks so much for that. That was William Tankard. He's the Director of the Precious Metals Mining. He's from Thomson Reuters.